Good morning, everyone. Today, my group mate Wei Lun, Arwin, and me, Yishan, will be presenting about the future of Australia financial sector. Financial sector of Australia play a big role of the national economy and has gone through significant change. Importantly, it is to examine the consequences of RC, also referred as the Royal Commission. Royal Commission is a major event and holds significant impact on Australia's future financial sector. Moving forward, three broad channel effects on conduct and misconduct financial institutions include of the effect of RC process on attitudes of end users. Second effect is the consequences of the RC recommendation, and last effect is RC experience on the perception of financial institution on the merits. However, there is few major factors that make it hardly to identify the consequences of Royal Commissions for financial sector, which is the consequences of technological change and ongoing agenda of financial regulation. But a new formulation of good financial policy can be used to examine it. The Banking Royal Commission and the Hayne Royal Commission was a royal commission established on 14 December 2017 by the Australian government pursuant to the Royal Commission Act 1902, and it is used to report into misconduct in the banking, superannuation, and financial service industry. The establishment of the combination revelation in the media of the culture of greed within several Australian financial institutions, and Royal Commission expected to have significant implications for future financial sector development.
Financial sector development, first of all, by answering the question of how will the Royal Commission affect the volume of financial intimidations and size of financial sector. Royal Commission could inflict a volume of financial intimidation used such as loanable fund approach one way, which is the Royal Commission could affect the volume of intimidation is by increase its cost. An alternative channel is via effect of demand for our supply of fund. Not only the Royal Commission could also lead to simplification of financial arrangement, such as fewer counterparty dealing and long intimidation chains, and thus a dealing in the side of sector based on asset and liability arrangement. Next, the second question is will RC lead to change in the pattern of flow of funds? RC costs affect the flow of funds to or from particular end user through the change in financial entities' relative costs, returns, and risks. When working with various consumer groups, and could also affect various types of flow of funds, such as long-term versus short-term contract, financial product types, and institution type. As RC was primarily engaged in examining misconduct being issued, it might thus be expected that proposed regulatory change would increase the cost of intimidations in dealing with retail customers.
The question is, what effect does the Royal Commissions have on organizational structures of financial institutions? According to the case study, there is a lack of organizational culture in organizations with incompatible activities and positive customer outcomes. It appears that the commissions have done nothing to eliminate the pursuit of profit objective within the financial sectors. However, they have reshaped the financial advice, life insurance, and superannuation sectors and the distribution model for retail credit over the period of the Royal Commissions. Given the variety of other factors affecting banks and the ADI performance, the cost nature of this statistic, it is only possible to conclude that they are consistent with the hypothesis that the Royal Commissions have increased the major banks' attraction to mutual ADIs. How has the Royal Commissions affected the profit outlook and the market valuations of major financial institutions? As the market book ratios for major banks' equity have decreased over the course of Royal Commissions, market valuations of bank equities have decreased, reflecting expectations of reduced future profitability. Prior to the Royal Commissions, there is a downward tendency in market book ratios. Among the factors explaining this downward trend, increased regulations are more likely to be blamed than the Royal Commissions. Nevertheless, the final report appears to be a relief for investors as financial institutions have experienced the greatest recovery the day after its release. Will the Royal Commissions lead to better provisions of financial services and products to the end users? Improved enforcement, increased accountability, and opposition should accelerate the improvement of financial institutions' internal controls and incentive systems in the short term. Australia's Commission has done nothing to remove or moderate the pursuit of profit objective on which most of the financial sector's behavior is based and which can generate incendiary incentives for misconduct and competition in such an environment of imperfect and poorly informed financial consumers, can lead to poor quality standards and customer outcomes in the absence of structural changes on which the Royal Commissions were silent. It is highly likely that a problem will reappear over time, given the level of financial literacy among Australians is generally low and they may be unaware of the hazards in the market. The implementation of the Royal Commission's report. 2 years have passed since the report was published, but there has been little progress. 45 out of the 76 commissioning recommendations have not yet been implemented and 4 recommendations have been abandoned. This includes the NCCP Act, the mortgage broker remuneration, the establishment of working groups, and the mortgage broker as financial advisor. Now, the delay in implementation is due to two factors. First, the COVID-19 pandemic, and second, the lobbying of government backbenchers. As a result, some government backbenchers are attempting to influence the decisions made by Parliament. And finally, the government is lenient towards banks and focuses more on consumers' responsible lending, which contradicts the intentions of the Commission's report.
Now I'm going to talk about the criticism. First of all, there is a danger of too many regulations being implemented. There is a concern that all of these regulations being implemented, there will be no time for future analysis and thoughts to consider when implementing the new recommendation provided by the commissioner heads. Secondly, there is nothing wrong with pursuing profits. This is how banks stay competitive with each other because their main goal is making profits and attracting customers. Lastly, is the concern of supply of credits, especially during this time of post-COVID-19 pandemic, which changes to regulations. It will affect the supply of the credits. Besides, it will affect the market conditions and the economy as well.
To conclude, everything according to the 5 above Royal Commission might impact development of the Australian financial sector in the some way. It is increased community and government awareness of pro-banking behavior. However, the changes is only temporary and appears the lasting impact unclear as mentioned in our critics. There are a lot of uncertainty factors such as evolutions of technology and the spread of disease. The effectiveness of this conduct need to be observed. This is to make sure to these trends that have been conduct will continue to detect the path forward from financial institutions and have far-reaching implications for accounting practitioners, financial advisors, mortgage broker and other industry participants.